Creative Global Funding Services, Inc. Inflation, the rising consumer prices and its impact on businesses, investments, and the overall economy. Introduction. Inflation is a term that has been making headlines across the globe in recent times. As the cost of living continues to rise, it's essential to understand the implications of inflation on businesses, investments, and the broader economy. In this article, we'll explore the concept of inflation and its multifaceted impact on various aspects of the financial landscape. The basics of inflation. Inflation is the rate at which the general level of prices for goods and services rises, causing the purchasing power of a currency to decrease. This phenomenon can be attributed to various factors, including increased demand, supply chain disruptions, rising production costs, and monetary policies set by central banks. While some inflation is considered normal and even healthy for an economy, it can become problematic when it accelerates rapidly, leading to economic instability. Impact on businesses. Increased operating costs. For businesses, one of the most immediate impacts of inflation is the rise in operating costs. As prices for raw materials, energy, and labor increase, companies face higher expenses, which can put a strain on their profitability. To maintain their margins, businesses may need to pass on some of these cost increases to consumers in the form of higher prices. Uncertainty. Inflation can create an atmosphere of uncertainty, making it challenging for businesses to plan for the future. Volatile prices can make it difficult to forecast revenues and expenses accurately, which can hinder strategic decision-making. Debt burden. Companies that have borrowed money may face increased debt burdens due to inflation. This is because the real value of debt decreases with inflation, which, while beneficial for borrowers, can be detrimental for lenders. Impact on investments. Erosion of purchasing power. Inflation erodes the purchasing power of money over time. Investors holding onto assets that do not keep pace with inflation may find their wealth diminishing. To protect against this, investors often seek assets that historically have a track record of outpacing inflation, such as stocks, real estate, or commodities. Impact on fixed income investments. Fixed income investments, such as bonds, may suffer in a high inflation environment. The fixed interest payments of these securities become less valuable as prices rise, leading to a potential loss in real terms for bondholders. Impact on the overall economy. Income redistribution. Inflation can lead to income redistribution, as those with assets that appreciate with inflation benefit at the expense of those with lower incomes or fixed incomes. This can exacerbate income inequality within a society. Central bank response. To curb the negative impact of inflation, central banks may raise interest rates to cool down economic activity. While this can help control inflation, it may also slow down economic growth, affecting businesses and employment. Conclusion. Inflation is a complex economic phenomenon with far-reaching implications. While moderate inflation can be a sign of a healthy economy, runaway inflation can disrupt businesses, investments, and the overall economic stability. To navigate these challenging times, businesses and investors must remain vigilant, adapt their strategies, and explore opportunities that can help protect their wealth and purchasing power. At Creative Global Funding Services, Inc., we understand the challenges that businesses face in an inflationary environment. We offer a range of financial solutions to help you secure the funding you need to grow and prosper. To learn more about our business funding options, please visit our website at www.creativeglobalfundingservices.com. Thanks for watching.